I'm a big dog, and I have lots of questions about forming my LLC for a fix and flip business and how to effectively write off expenses for 2023. I haven't set up my LLC yet, and I'm in the middle of rehabbing a house that we won't be able to put on the market until next year. Is it too late to set up the LLC and get those write-offs for this year? Does it matter if I'm not making any money yet? Should my LLC be filed as an S Corp, but I would have to be earning income and paying myself something, right? Can you explain how it all works? Oh my God, that's a big question.
There's a lot packed in here, and that's why I picked it. First of all, the one thing I want to get to is we're in the middle of rehabbing a house. We don't have the LLC set up yet. There's probably not a more dangerous time for getting sued just from an asset protection standpoint. So I'm going to advise you get that thing set up. A story I've sometimes told the other tax advisors and other clients. I used to do a lot of Habitat for Humanity. I remember one time a gentleman brought his young son there to help out, learn about helping others and things like that. It was a very nice gesture. And he immediately goes for the automatic nail gun and starts waving around. Now, apparently those things won't fire unless you press them into a wall, but when it's aimed at you, everybody's dropping to the floor. So lawsuits are all over the place when you're rehabbing. So get that set up.
It's just
yes, exactly. And I remember that from the Wesley Snipes movie, one of my favorite ones. He does that. And
the guy.
Yeah, the
they don't shoot, right? You have to push him into something.
Right. Well, it did in the movie, but anyway, get that set up, that LLC, get it in there. Don't mean to scare you, but this is a hazardous time right now for that. All right, on to the tax side of it. Write-offs. Remember, you're doing a fix and flip, and it's basically inventory. All your costs that you're incurring are inventoried, which means we don't get to deduct anything until the year you sell it. So right now, those are just going to pile up. We call it goods available for sale, lots of different terms, or just inventory. And so while you will get to deduct at some time, it won't be until you actually sell it that year. So we have a matching of when we sell and when we take the expense on those. That's the first thing. It's first two things I'd point out. Now, is it too late to set up the LLC? No, get it set up right away. How do we want it taxed? You're going to probably want it as an S Corp or a C corporation, a corporation nonetheless, either way, because it's ordinary income subject to additional employment tax. Get it into the S or C. You can do all the reimbursements we talk about. Like I said, there's a whole lot packed in here.
Yeah, and the difference between the S and the C is the S flows down to your return. You're kind of looking at it saying, don't I have to pay myself? You don't. The only time you have to pay yourself a salary out of an S Corp is if it has net profits and you distribute them. So in this particular case, it's clearly going to have losses, right? And if you want the benefit of those losses, what you could do is set up the LLC, tax it as an S Corp, because we're holding this property for inventory. You could incur a bunch of expenses. Do you have any income? No. Could you, in theory, create losses? Yes. And if you dump cash into it so you could reimburse yourself, you have basis. So you could actually create a loss this year that's going to offset your other income. Because you're obviously materially participating in this. So, I mean, I'm saying obvious, but you probably, because it looks like you're doing the fix and flip. And that would create a loss that you could use against your W-2 income if you want that deduction this year. Now, it ends up being a loss that gets passed down so long as you actually reimburse yourself for those expenses. I don't know what other expenses we have. Let's see. Most of the rehab gets added to basis, but to the extent that there's other expenses, like let's say you bought that nail gun and that nail gun cost you $500, we're not capitalizing that. That's an expense. Yeah. Let's say you fix something on the house that was broken. You're not capitalizing that. That you could safe harbor that and write it off as an expense now. You could generate some expenses that would go onto your personal return. Things like that. And I guess I'm not going to repeat everything you said, but that fix and flip business, just remember that real estate isn't always passive. It's not always an investment. Sometimes it's a trader business. If you're a construction, if you're a real estate agent, if you're flipping houses, it's a business. It's trader business. So it's not a passive activity, and you get to write off all ordinary necessary expenses. When you have that S Corp, a little different. You can actually be reimbursing yourself an administrative office in your home. You can create losses that way. You could be doing 280A, which is another way to create more expense. But again, in order to write it off in 2023, you have to fund it and then reimburse yourself. If you want to wait until 2024, you could do that. And as long as you reimburse yourself from that business, and it could be after you sell, then all those expenses would actually go into the 2024. So just to reiterate, I would be setting up that LLC, taxing it as more than likely an S corp under these circumstances, but it would depend, you know, if you have a ton of income or maybe you have no income, this is all you're doing, then we might make it a C maybe. But for the most part, and it depends on your health expenses too, because you can write those off out of a C corp that you can't out of an S corp with a health reimbursement plan. So there's some things we would look at, but for the most part, I'm going to say probably 90% it's going to be that S corp or LLC taxed as an S corp, and that we're going to want to probably get those things funded out to yourself. Somebody says, I thought it makes it more difficult to sell a property if it's set up as an S corp. No, Kim, if it's investment properties, we don't want an S corp, because if you take them out, it's taxable. So if you take it out to refi, like, hey, I have a house that I bought and it's in the S corp, and I pull it out to do a refi, that's a taxable distribution to myself of wages. Like, it's actually really heinous. It's ordinary income. Whereas if I am just going to do a flip and I'm going to sell it in there, it's not really considered investment real estate. It's not. So we're not in that same scenario. This is inventory when you're doing dealer. It's no different than if you were a car dealership, or if you were a mini mart and you had Cheerios on the shelf. You don't write off the cost of goods sold until there's actually a sale. So I hope that helps. I have 2 S corp businesses, Meta Spas, and would like to know what are some of the write-offs for the business. Oh, I'm sure, Regina, that we teach that, and I'm sure you could reach out. I would actually put it in the Q&A and they can give you some of those ideas. All right. So that is that question. Anything to add?
No, that's it.
It's never quite simple, right? Like, sometimes you're going to get a little bit of a depends, and it depends on your facts and circumstances, but the general rules are there.
Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.